G'day there, Investorholics and friends. Welcome to the next video. I thought it would be interesting to take a look at gold. We've had a look at some gold ETFs in the past, I should say. I thought it'd just be an interesting little follow-up because we've seen that gold has achieved fresh all-time highs. It's been doing a little bit more reading about different things. So investors are loving gold ETFs at the moment. So gold-backed ETFs and similar products account for a significant part of the gold market, with institutional and individual investors using them to implement many of their investment strategies. Flows into ETFs often highlight short-term and long-term opinions and desires to hold gold, for holding gold, either. For physical investments, there is a forecast for low single-digit percentage declines in total bar and coin demand as convenience and safety help ETFs gain further share of total investment demand. So there's a shift away from actually wanting or needing to own physical gold. ETFs can be as big of a source of supply as they can be a source of demand, depending on the investment environment. So at the moment, they're a source of demand because everybody's buying up. When sentiment changes, obviously there'll be a source of supply because people are selling, so there'll be more gold coming onto the market because people are selling their ETFs and therefore their holdings in gold. So that's mainly driven by the motivation of ETF investors, and that tends to be sort of short to medium term. Which is a little bit different to people who like to buy physical gold. They tend to be long-term holders. So ETF investors are more likely to become net suppliers at times. So like I said, just depending on the cycle, it's quite easy to liquidate your ETF sitting at your computer. So anyway, that's just a little background. Let's get on to some fun facts anyway. Well, hello there, Investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your own personal finances, expand your investment horizons, and crack your financial sky. So last year saw the resurgence of investment demand for gold, and subsequently the gold prices started to head north as well. So the price spiked nearly 20% in the third quarter of last year to about $1,550 an ounce. That's US. Gold saw a similar rapid appreciation in early 2016, so just a bit of a comparison. Unfortunately, in 2016 it didn't last, but today's environment seems to be a bit different. Obviously, there's a few different factors with COVID-19 and the fact that pretty much everyone's printing money. With the Federal Open Markets Committee cutting the federal funds rate 3 times since August, gold investment case has strengthened as bonds become far less attractive a relative investment. So pretty much there's no money to be made from putting your money in bonds. So the World Gold Council says that physical gold held in exchange traded funds has reached a fresh all-time high at the time of writing and recording this anyway, of 3,824 tons. So that's, I think, more than the average yearly production. So we've had some low monthly inflows though over the last few months, so there's been a few changes. So year-to-date global net inflows of 938 tons. That's about 51.2 billion US dollars worth of gold. and that's been taken collective. So pretty much once you collect up all the gold ETFs, mainly US obviously, because that's where the big market is. So you got your fresh all-time high there for funds under management, and the total funds under management, when you calculate your 3,824 tons of gold, is about $241 billion US dollars under management in gold ETFs anyway. So that's a lot of gold sitting in vaults and all the rest of it. So yeah, I think, you know, at the time of putting this together, the gold inflows had slowed down, but they're still inflows nonetheless. Okay, so in August we saw gold price all-time highs, looking at $2,067 per ounce US. So later in the month it dropped off a bit, so you're looking at high 1900s for the first time in 5 months as economic conditions eased a little. So, you know, there's lots of predictions about where the price of gold is going to go, but there's still quite a lot of interest, and mainly through ETFs and people buying gold for short to medium term hedge against volatility in the markets, depending on their view, obviously. So we're seeing a growing appetite for ETFs, gold ETFs in particular. North American funds continue to dominate and represent 2/3 of global net inflows for the year. The Gold Council, you know, in the article that I was reading anyway, that's what they're banging on about. US issued iShares Gold Trust leads the global inflows for the month, adding an extra 13.9 tons. And that's equivalent to $897 million, US million dollars anyway, or 2.9% of funds under management. So the council said demand for gold looked set to be supported by effective negative interest rates in all developed countries anyway, and the ongoing unknown impacts of COVID-19. So pretty much if the money supply is high, it sort of devalues the value of money, I should say. So therefore people are looking for another store of value. And obviously if interest rates are low, no one's earning any money on bonds anyway. So yeah, low rates and positive momentum appear to more than offset the shortfall driven by economic weakness. So obviously, because of COVID-19, there's been lots of shutdowns and the economy's going south a bit, but gold seems to be going north. So I thought it would be interesting to have a look at the gold ETFs, just a quick overview. Obviously the ones listed on the ASX, because that's where we focus on here. The channel, look at year-to-date returns. So these are the three ETFs that track physical gold anyway. Obviously you've got some are hedged and some are unhedged and all the rest of that type of stuff. But there's the figures anyway. So we've seen very, very strong, over 20% rise in the price year to date of the three gold ETFs listed on the ASX. So the price of gold shows increase by 31% in the last year anyway. So even after factoring in recent corrections, wealth managers say investors are adding gold to their portfolios, believing it could be one of the best performing asset classes. Yeah, that's what they're telling you. So whether that's true or not over time, that'll bear out. But right now, that's what people are saying. So, you know, obviously there's a bit of uncertainty surrounding equities, and obviously as we sort of touched on a couple of times, got low rates in fixed income products, so obviously bonds or CDs and that type of stuff. It's pretty low, so looking for somewhere else to generate some value, and that's aiding the trend to the exception, and gold prices are going higher. So if you're interested in doing some more research on gold ETFs on the ASX, check out QAU, or have a look at PM Gold or GOLD, which is the ETF's physical gold ETF, and they all have different pros and cons, so definitely worth checking it out. I'll leave a card. I've had a look at, reviewed most of these anyway, so I'll leave the cards up the top right hand corner so you can have a look at them at your own leisure. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's Crack the Sky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are, expand your investment horizon, and crack your financial sky. Thanks guys, see you later.